G'day folks, and welcome to a Check Onchain update for the 5th of November. Well, today we're looking at what happens if we head lower. Now, markets can rally on bad news, they can sell off on good news. The one thing that they do not like is uncertainty, and there is nothing quite like the uncertainty of an election like we have coming up in the US. So what I'm going to be covering today is how I think about things from the perspective of check the analyst and check the hodler. Check the analyst is coming in to do a really kind of objective and just look at the state of play, building what we've been talking about over at the Check Onchain newsletter, looking at the amount of volatility that's really building into these markets. We've got an influx of speculators. We've got all sorts of things starting to shift and change, and we're really moving away from this chop consolidation phase we've been in really for 7 months. And then check the hodler is going to step in and say, well, what am I actually going to do with this information? Once we've done an assessment of the lay of the land, what does check the hodler actually do with that information? So I really accepted many years ago that I cannot predict the price, and nobody can, right? Nobody has any kind of crystal ball. None of this works. Predicting the price is really the best way to blow up your account and your reputation, because the reality is that absolutely nobody knows. The way I like to frame this up is I want to just think about what am I going to do? Right? If the price was to go somewhere, right? And we'll define what those somewheres are. When the price goes to that location, if and when, what is my decision framework at that time? Not will it go there, not it's gonna go there. What am I going to do? And that's really what we're going to cover in this particular session. Going into this election, there's likely to be a whole lot of volatility and the market's shaking around. I'm going to assume that most people watching this are probably bullish and net long Bitcoin. So if it goes up, happy days. We're all happy campers. There's two other options really, which is that you can, kind of look and see if this is fair value and maybe, stacking sats going into the election. The other one is, well, what happens if we go lower? And that's the hard one because, we don't know if it's going to go lower. There's a risk in that too. How low can it go? What are the key levels to really be looking at? This is really the question we're going to be focusing on. So covering what happens if we go lower, how does check the analyst kind of assess the macro backdrop as we head into the election? And then, what does check the hodler actually do with that information? With the assumption being that, if I can stack sats at a cheaper price, that would be preferable. Now, this particular video is going to be part one. We're going to cover these first two topics on the macro backdrop and then really assessing the current setup. For the section on where we actually head lower and, really kind of refining how I think as check the hodler, how do I think about those levels? What am I kind of personally preparing to do? You'll find that over at the Check Onchain newsletter at checkonchain.com. So without further ado, let's get stuck right into the charts. So I want to start this session by just recognizing that as it stands right now, we've got a $68,000 handle, right? As looking to my block clock, we are 8% below the all-time high. Bitcoin has been chop consolidating for 7 months, just below the all-time high, and we are 8% from the all-time high. Now, if we just kind of take a really big picture look at that, right? Yes, we have the election, which is likely to be a catalyst. Yes, there's a difference between Trump and Harris. Yes, the overall kind of demeanor towards Bitcoin and the crypto industry is different. If we go back here to 2016, this was a 2016 election, right? It didn't really matter that Trump got in. The market went higher. If we go back here to November 2020, right? It didn't really matter because the market went higher. What is the commonality between these? And I could roll back the price charts as often as we want. What is the key difference between the 2016 and the 2020 election, right? Trump, Biden, very different. Here we are. We don't know which way it's going to go. In all three instances, the only party that's not going to get elected is a fiscally responsible one. Literally, the reason that I hold Bitcoin is because I know that these politicians are going to spend money like drunken sailors. I saw some stats very recently that they've added like $600 billion to the debt pile. It's like $100 billion in a single day, but 600 over the span of like 5 or 6 weeks. This is why I hold Bitcoin, right? The reason why the chart is only 8% below the all-time high is essentially because the market knows that Bitcoin is a very sensible and sane instrument to kind of survive the circus that's coming irrespective of who wins. Right now, one caveat I'll put onto this, and I won't go any deeper into this, but Bitcoin I think is just, it's beyond the event horizon now. I think Bitcoin's going to be just fine no matter what happens in this election. Now, when I'm talking about this is going to be, in the short term, they'll be choppy and all sorts of volatile liquidations and all that kind of stuff. I'm talking about over any meaningful time frame, Bitcoin's going to be just fine. I'm not so sure about the alts. I think if Trump was to win, I think there's a more favorable case for Bitcoin and crypto by and large. I still think Bitcoin sucks the air out of the room, and I think alt BTC ratios get absolutely minced. On the other hand, if Harris wins, I think they get minced just out of sheer principle. So I think for alts, they're in a bit of a tough spot. For Bitcoin, I think it's going to be just fine with near-term volatility aside. Now, this is the other chart I want to use to really plot out and just have a look at the macro picture. We've got a couple of traces here. On the blue up the top here, this is obviously the previous cycle all-time high, or the all-time high as it stands. If we look at again, here's the 2016 election, right, in November. Here's the 2020 election in November. Both of these were on their way up to the all-time high. And surprise, surprise, we're in the exact same position today, right? Heading our way up to the all-time high. Now, interestingly, these green bars, they are just simply showing when the market is setting new all-time highs over a 90-day window. So that's price-based. Down the bottom here, isn't it funny that these green zones, this euphoria zone as I call it, when we get above the previous all-time high, tends to correspond with MVRV, the unrealized profit held on average per Bitcoin, getting up into the +1, +2 standard deviation range. So in other words, when the market gets up to the previous all-time high, the average investor is actually pretty up on their position, right? The greener your portfolio, the more likely you start to actually take profits, but also the better you feel. When MVRV is at very low values, bear market sentiment, people feel awful, right? Now that's when you've got the most hardcore hodlers doing the most stacking. But where we are at the moment, we're in a very, very cooled off position for a bull market, no less. We're in a relatively cooled off position, like in, late 2016, late 2020, very, very similar type environment. So the market has cooled off quite a bit. We are not near the 1 standard deviation level. So we're actually in a very favorable position as it stands. But isn't it funny that in all the again, we don't know if the previous 2 elections are going to be even remotely indicative of what comes next. What I'm fairly confident of is that a fiscally irresponsible government is the one that's going to get elected. And as a result, it's the reason I actually bought Bitcoin back here in 2019 and 2020. I wasn't around in 2016, but if I had to kind of work things out, it's a very high likelihood I'd be buying it for the exact same reasons. Has my 2019 thesis changed here in 2024? Not even a little bit, right? It's literally why I hold Bitcoin in the first place. So let's talk about the kind of fair value, right? Because there was that option 2, which is, okay, well, does it make sense for Check the Hodler to actually stack sats here? What does Check the Analyst have to say about that? So what we're looking at here is 4 different NVT prices. Now, NVT price is basically using on-chain transaction volume, and I've got a couple of different formats here. One is just looking at on-chain volume. One is looking at it from a filtered perspective, exchange volumes, right? Inflows and outflows. And then also a coin blocks, which is time and volume weighted. So 4 different ways to all measure the same thing of how much throughput in terms of volume is the Bitcoin network currently settling. Now, it's quite interesting that they have all converged in and around this current price. So in many ways, we are very, very close to fair value as measured by the amount of throughput. Now, the other way to think about that, Bitcoin currently has enough volume flowing through it by 4 different measures that it's justified its current price up here at that $60,000, $70,000 region, right? That's kind of the message that this is sending. Now, late 2020 was actually the only other time that I've really found where we had this kind of nice, smooth convergence around the price, kind of horizontal, finding this level. Everything else you can see, we get divergences. Sometimes there's more volume, sometimes it's filtered, sometimes exchanges. Very rarely do we get this kind of consistent theme somewhere in that 60 to 65,000 realm, right? Here we are at 68. In many ways, we're kind of pretty fair valued. So by that metric alone, right, it's kind of telling us that on a throughput basis, things are actually looking fairly okay. Now, the other thing that stands out to me is long-term holder supply, which is the blue zone you've got here. So long-term holders currently have 14.3 million Bitcoin. And this is only just below the all-time high. So right now, it's about 70% of the overall Bitcoin supply is held by long-term holders. The all-time high was set at 74%, and that was back here, literally this time last year, as we were kicking off the run-up in the anticipation of the ETF. So, really, at the end of the day, long-term holder supply is about as squeezed as it gets, very, very close to the all-time high. this doesn't describe a market that's full of speculators. It's full of people who have no idea. They're just here for number go up. We have a very long-term holder dominated market. And in many ways, that's kind of the people I want to be in the trenches with. And, do I see myself in this data? Yeah, I see a whole bunch. Well, I'm not going to say a whole bunch. I would see my coins in this blue zone, right? Because I've been around for long enough. Most of the people who hold Bitcoin are in that long-term holder category. We had the distribution cycle into the ETFs. We've then seen an uptick, right? We had a couple of coins get spent here. A big chunk of this was actually WBTC. About half of that decline is WBTC. So for all intents and purposes, we are very, very close to the previous all-time high of long-term holder saturation. Overall, this is a fairly good thing. Now, the other metric that I like to kind of paint a very similar picture is RHODL ratio. So RHODL is really tracking a balance between this long-term holder cohort and speculators. Coins that haven't moved for more than a year versus coins that have moved very recently. And we're looking at this on a USD weighted basis. Now, high values of this metric is basically telling us that lots and lots of the coins that are held have recently transacted. In other words, you've got a very, very high concentration of brand new buyers, people who've only just bought their first coin. They've probably done so at a very high cost basis. They could be at, too many people buying too many coins at too high of a price. So excessively high levels for this metric is not great. Now, where we are at the moment, we're in this kind of sideways holding pattern. And you might see there's an oscillator down the bottom here. Now, I won't go into the details because it's a little bit nuanced, but this is what I call a momentum indicator. What I'm really looking for is what is the momentum, or how is this particular metric trending relative to its own baseline? Now, what we can see is that very typically during bull markets, we kind of oscillate up here in this orange zone. Once we tag into the red, it's usually some kind of meaningful top. Now, we did tag this with the ETF, but we then pulled back and been chopping around in this orange zone. So to be honest, so far so good. Things are still positive. It hasn't reached some kind of extreme run up, similar to the MVRV. We had a nice little cool down. You got to remember, by the way, this is in log space. So these small movements here are actually quite meaningful in terms of log scale, right? So these very low values are much, much lower than where we are here. This holding pattern is actually somewhat similar to that late 2020 period, even 2019. So this is, and by the way, from a market structure perspective, 2019 and 2020, these are the most similar periods to where I've seen similar market structure. You could argue that there's a bit of similarity to this sideways chop that we've got going up here in 2021. But as we've covered at the newsletter, there's so many different pieces of evidence where it's just not quite there. Calling that to be, it doesn't quite fit the brief. It's probably the least likely to be of a connection. It's always possible, but it is the least likely in my view. So in many ways, this kind of feels like one of these mid-cycle type behavior patterns. So that, kind of puts things into perspective from that view. Okay, so this is the chart where I want to really establish the overall kind of how do I think about where the market could go? What's the next step, right? I don't know where the price is going to go.